All right, today we're diving into the latest earnings report from Norwegian Cruise Line, ticker NCLH. They reported their numbers back on March 2nd, and the market's reaction was, well, let's just say it was severe. We're going to break down exactly what happened.
So here's the big puzzle with this report. Norwegian actually beat what analysts were expecting for earnings per share, and yet the stock just got completely crushed. So what in the world did the market see that made that earnings beat totally irrelevant? That's the big question we're going to answer today.
Okay, let's get right into the headline numbers. On the surface, it looks like a bit of a mixed bag, but the details, they tell a much, much darker story.
So at first glance, things look kind of okay. Adjusted EPS came in at 28 cents, which was a little better than expected. That's the good news. But the bad news came from the top line. Revenue of $2.24 billion missed expectations. So you've got a beat on earnings and a miss on revenue, but even that doesn't really explain a double-digit stock collapse. No, the real poison was hidden somewhere else.
You see, the real damage wasn't in the numbers from last quarter. It was in the company's forecast for the future. And, maybe more importantly, management's own explanation for why things were going sideways. They basically told investors that this whole mess was their own fault.
And this right here, this is the number that sank the stock. Management guided their full year 2026 adjusted EPS to just $2.38. The Street, they were expecting something closer to $2.56. This wasn't just a little miss, it was a huge red flag that the core earnings power of this business is way weaker than anyone thought.
On the earnings call, management was actually pretty blunt about why this was happening, and they kept calling the problems self-inflicted. They admitted to moving too many ships to the Caribbean way too soon before their private island, Great Stirrup Cay, was even ready for them. They confessed to a messy commercial strategy, not spending enough on crucial tech, and getting squeezed by their competitors up in Alaska. So this wasn't about people not wanting to cruise, this was an execution problem, pure and simple.
And you don't have to take my word for it. The CFO, Mark Kempa, was crystal clear about this on the call. This quote gets right to the heart of the problem. It was a failure of basic planning. They made a massive strategic move without having the pieces in place to actually make money from it.
So when you put all of that together, you get the market's absolutely brutal verdict. This wasn't just a reaction to a bad quarter or some weak guidance. No, this was about a complete and total loss of faith in management's ability to run the company.
And the market's reaction was immediate and it was harsh. A 10.5% drop on the day of the announcement with tons of shares trading hands. Look, when a company beats on earnings but still gets punished this badly, it's the market screaming that it believes the bad guidance and it just doesn't trust that management has a clue what they're doing.
And to put this all into perspective, this isn't just a one-day problem. Over the last year, Norwegian stock is actually down over 2%. In that same time, the Invesco Leisure and Entertainment ETF, which is a great benchmark for the industry, is up over 13%. Norwegian is just fundamentally lagging behind its peers.
And here's another critical piece of the puzzle. The activist investor Elliott Management has built up a pretty big stake in the company. And let me tell you, these guys are not known for their patience. This puts an incredible amount of pressure on the new CEO and management to turn things around and to do it fast.
Okay, so that's the diagnosis of what went wrong. Now, what about the prognosis? What happens next? And what should we all be watching for? This is our take on NCLH's path forward.
For us, this whole story really boils down to 3 make-or-break factors. First, we need to see actual proof that they can stabilize their net yields. That's stuff like ticket prices and how much people spend on the ship. Talk is cheap. Second, Great Stirrup Cay. That new water park is supposed to open this summer. Is it actually going to make a difference to the bottom line? And third, and this is the big one, execution and credibility. Can this leadership team, with an activist breathing down their necks, actually follow through on a single promise and start rebuilding trust?
So, with all of that in mind, our rating on Norwegian Cruise Line is market perform.
Now, let me be really clear about what that means. We see the potential for a turnaround here, for sure. But the risk that they'll just mess it up again is just too high to be bullish right now. Management's credibility is in tatters. So we are firmly on the sidelines until they deliver some tangible, measurable progress. This is a show-me story, not a tell-me story anymore.
So to wrap this all up, let's just quickly go over the most essential takeaways from this earnings disaster. First, that Q4 earnings beat was a total head fake. It was made completely irrelevant by the terrible 2026 guidance. Second, management basically admitted to a whole series of operational screw-ups that they themselves called self-inflicted. Third, the market's reaction showed there's a massive credibility gap.
And finally, the entire investment case here now rests on whether the new leadership can actually fix a broken culture of execution.
Which leaves us with the final, defining question, right? You've got a new CEO, a market that doesn't trust a word they say, and a powerful activist investor watching their every single move. Can Norwegian actually navigate through all these self-inflicted wounds and finally restore trust? Or is this ship still taking on water?
That's our analysis. And as always, this is not financial advice.